Hello and welcome. This is going to be a review of my trades taken between April 28th and April 30th, 2025. It's been a pretty good past 3 days. However, there has been some common themes. Um, on the more positive side, uh, having a asymmetric risk reward ratio where my losses are larger, or sorry, where my losses are smaller than my wins, sometimes multiple times smaller, uh, has been super helpful and in um, improving my bottom line because I've been able to eyeball trades that have really ran, 10, 15, 20 points on the ES versus being able to reduce my losses when I'm wrong and a good amount of the time getting out quick when I'm wrong for 5 or 6 points. Um, so that's been something that I've been implementing more recently and has really shined through, especially in the past. I think I've taken 15 or so trades. I've definitely taken more trades than I should have. But I would say that maybe three of them were not. But I feel like for the most part, all of them were good trades. Even the ones that lost. But I would say like two or three were unnecessary, and I'll get into that and why. But yeah. So again, just starting off with the market context because this has been so important for me. On the higher time frame, last week's close was really important for me. We closed at a major level from what I saw. We had closed right here, and I'm going to mark out that level. This was Friday. And this was the high at the high of the range we've been trading in for a few weeks now with all this Trump volatility. So this is the bottom of the prior range, this candle right here, and then you can see my blue line that I had marked out from Friday's close. This was the high of the new range that we've established. So we had this range here, right, broken down and formed the new range here. And we had closed right at that high on Friday, which was right here. So this is kind of that new area that we've been trading in. This was with the Trump tariff news and all that stuff that you're seeing. So this was in part why it was so significant for me because I saw us trading up into some major levels right at the close, and I knew there would be something funky going on into next week. And that's exactly what we get here. We get a breakout of the highs of the range, right? You can see this resistance here from Friday. Resistance, 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 all right here being cluttered up in this area. And then we sweep those highs with that large wick, and immediately the breakout fails. So this is just a liquidity grab, and we trade lower. And that's exactly what we have here. You see on the 2 minute chart, we have a failed breakout of the previous high of day as well as the higher time frame range. And that gives us our first short setup that I didn't take, but I liked here. This would have been a trade that I would have loved to take. We have the inverse cup and handle, which forms here. Then the dual red algos. First, you can take this break, and basically with the head and shoulder, right? Betting on the break to low of day, which we do get, and you need to be out by here. I'll talk more about that later on some issues that I have with taking profits rather than, especially when I'm so close to my target and I'm at a significant level, rather than just stubbornly holding. And then we have the double algo here. So cup, we form the handle here. This is also a head and shoulder. We form the full pattern, right? And you can enter here short. This would have been an absolutely gorgeous trade lower. You have the higher time frame context, and then you have the intraday structure, as well as the algos here. We continue to trade lower, and we have strong, very aggressive selling, and I'm looking for continuation algos for us to trade up into as resistance and take a short from. So I have this orange band from here and here. I post it to the top, and we trade right up into it. We have a double wick as resistance, and you can enter right here short. Beautiful. So we continue to sell off, and this was my first trade of the week, which is not a trade I'm very proud of. You can see from here, this is all support, and which we know soon, after we break down in a bear trend, will turn into resistance. This is market behavior and price action 101. And we trade right into that resistance. And I'm long. Long off of, I really don't know why. Because I have this very tight white algo that I drew, and I posted it here, even though it should have been towards the highs, posted at the top for reversal, and also I should have been looking for a reclaim of this level as support for a reversal, or the breaks of the major intraday algos, which is my yellow that I have here from this pivot and this pivot, and I posted it up top here, which we do eventually get beautifully here. But I'm just longing into support based off of getting too involved with the bars on the 1 minute, something like this. This is such a common type of losing trade you'll see. And there's not even any bullish momentum here. We have bull bar immediately with bear bar, strong bull bar immediately with a strong bear bar, right? So we're just chopping our way up here. It's not like this. This has strong momentum, and sellers are being sucked up. Just 1, 2, 3, 4, 5 consecutive straight strong bull bars in a row. And this is just chop, right? And if you look at the 16 minutes bars, there's no reason to get long here. Sorry, I'm on the 30 minute. Let me get on the 16. There's absolutely no reason to get long here. So we have very strong engulfing selling. It trades above the high and then through the low, closing on its lows, and we sell. And I entered it was at this point in time. This is where I entered right here, right on there. And if you just look at those bars, and you look at this sort of selling channel that we're in, like, there's no reason to be selling here at this point, to be longing here. The market hasn't built any structure. This is like an H1, if you follow Al Brooks. This is an H1 reversal in a bear trend, right, in a bear channel, which is low probability. There's no reason to be taking that sort of trade here in this context, especially when you look at the 16-minute chart or a higher time frame chart, right? It doesn't have to be 16-minute. It's just an arbitrary number. But especially when you see something like this and you look at the higher time frame, this doesn't look bullish at all. This, when you get too focused on the bars, too focused on the noise on the lower time frame, you can convince yourself that it's bullish, right? But once you have this strong close, and you have the H1 here, the high one, and now a high 2 with a strong bull close right at the support, right? So I was looking on this day. You can tell that I was looking for a reversal here. And this is because I had noticed we were still in a strong bull trend for the past several days, right? The market was strong. You can see we have just been trading higher and higher and higher and higher for the past 1, 2, 3, 4, 5 days. So I wasn't looking for a massive sell-off. I was looking for a pullback. And that's what we got here. You can see this is a very good support level here, this blue level, this general area here. This is the previous high of day of April 23rd. This is the exact high, right? And look where we bottom out. Right around that exact high. And what happens there? We have very strong buying, this big bull bar, which you can see here on the 2-minute time frame. This also coincides with this exact high. So we have two high of days here. One from April 14th, April 23rd, and now we're backtesting that level after breaking out right here. You can see the breakout right here, and now we're backtesting that level of support. Beautiful. It's just a break and retest, right, on the higher time frame. Absolutely gorgeous. But this was not a trade to be taking, right, because this was at this point in time. But yeah. This is the first reversal attempt. The first reversal attempt usually fails. This is the second reversal attempt, right? That's a high 2, as we can see structurally. So yeah. And then I long here again. And what I'm saying about this trade is that nothing has changed from this long here to this long here. We are still within the major yellow selling angle. We have not broken out. There's still no strong bullish momentum. We still have not reclaimed the support. The higher time frame, this was at this point in time. So the bar looked like this. Right, the bar was right here on the higher time frame chart. There's no reason to be longing there. Looking at that, there's just no reason. And I was so focused on, something like I don't know, whatever BS was here, this blah blah blah, you know, that I'm failing to realize or even kind of pay attention to the fact that, like, look, this is a head. You have to give the local trend the benefit of the doubt. This is a head. This is a left shoulder. We just broke down. And this retracement here, all it's doing is forming a right shoulder of the head and shoulders, which aligns with this. And I'm focusing on whatever it is to the upside, even though you always have to give the benefit of the doubt to the local trend. Right? And the structure formed beautifully. Head, left shoulder, right shoulder. Yeah. So, and look, clearly there will be other opportunities for me to long, which you can see from this trade and this trade. But that's once momentum is established. That's once the market clearly shows you that one side is stronger than the other. And once we have a move like this, that's very clearly the case. Or a move like this, right? How big is this move? Like, you know, that's a 45-point move on the ES in like an hour and a half. Like, clearly one side is stronger than the other. And you're joining in that momentum. Yeah, Trophy Hunter says this, which is so true. He's like, day trading is all about momentum. Just trying to day trade for the sake of day trading is impossible. Like, you're going to lose money. No, you have to join the momentum. You have to join the side that's more powerful. That's the imbalance, right? Momentum occurs when there's an imbalance or an inefficiency, and then the market runs to then, remove that inefficiency or fill that imbalance. And that's what we have here. So, yeah, we have this bar here, yellow algo, break of the major intraday algo right into all of this liquidity here on the left. And we have this strong momentum here. This would have been a pretty aggressive entry. You don't have to take this entry. I think it's fine, though, because you have the head, formation, left shoulder, and then the breakout. But if you miss that, there's plenty of other entries. There's 2, 1, 2, 3, 4 other entries long that you could have taken. So just like how you have my orange selling algo here that I trade, I have this one here, right? Very aggressive pivot. I post it here to the bottom. We hold here. That's a long. We also held right here. This would have also been a long. And what level are we backtesting right there? At this area. I didn't take this trade, but what level are we backtesting? It's this exact same support that I was talking about earlier that had to be reclaimed. This got reclaimed beautifully right here. And what do? We reclaim that exact level. We form a right shoulder, right? So head, left shoulder, right shoulder. Yeah. And then we continue to trade. And then we backtest that algo again. Find support, find the wick, and I long. And we're trading right into this. We're trading right into this purple algo here that I had gotten from these pivots here, right? And I had posted it to the 2 top bands, this one and this one. So you could have entered on this break, but I didn't. We were just trading up into it, but on here I did, where I have this teal algo from here that's holding. You see it holding resistance here. So it's resistance, resistance, resistance. Hold on. Let me mark this so it's not. Resistance. And then we break above, and what do? It's support here. And this also aligns with the break of the major intraday, most tapered purple algo that I had charted here. And I long again. So, yeah. A lot of good opportunities today, a lot of beautiful price action. It's a pretty cool day to have traded. So the next day is, yeah, okay, awesome. So I had read that previous day as a nested cup close from the higher time frame cup, right? As you can see from this. Like, to me, that's such a mess. But this whole thing, this whole move here, is from the top of the range all the way down, and then we trade back up to the top of the range. This is a cup, right? And now on on Monday, we formed a micro cup, right? A nested cup. So I was looking like this, right? I was looking for some sort of handle and a breakout to the upside. And that's exactly what we got. And you can tell that by the amount of longs I was taking aggressively at the open. But yeah, so I had that context walking into the day. We had opened within the previous day's range. Um, and from my just general understanding of data that I've gathered as well as the markets, it was likely that we would at least break the value area high, which was this level here, or the value area low. So those were clear targets on the day. And given the upward bias that we've been seeing, the value area high was more likely, right? So what do we have? This was the first trade. This would have been a pretty aggressive short. You could have taken top algo orange here, posted to the origin of the pivot, which for me is here, and we reject with wicks and trade lower. And a lot of, if you are watching this and you're in Eric's Discord, and you're trying to get insight on how to draw the algos, I think the only way to do it is to just draw them yourself and to eventually develop a way that works for you. The way I draw the algos is very different from anyone, and the way Eric draws it is also going to be very different from anyone. There's no one in Eric's Discord that draws the algos just like Eric. Some might get close, but there's major ones that are completely different. And what that says is that you just have to find a consistent way that you're able to verify has an edge of drawing these lines. And if you're not able to do that, then you should be able to, then you should be looking for something else, right? If you're just randomly drawing lines and you haven't tested them and you don't have a system for drawing the lines, or you don't have some sort of intuition that you've built from drawing thousands and thousands of lines, then that you've actually backtested and proven have an edge, then you're better off looking for something else if you're not willing to do that. Because then you're just trading blindly. Then you're just looking at random lines and you're taking trades, right? So this is how I draw them after, the amount of time I spent doing this. And yeah, anyways, so this rejects, you can short here. This would have been a decent trade, grabbing this liquidity that had been built here. Then first trade was, you can tell I was aggressively trying to trade long. We had a cup here, a nested cup. We had this very clear white algo. It broke out. However, I had entered so late. I entered here, and I could have entered here. I could have entered here, and had an entry that was like 3 points earlier. But I think I was just very trigger shot on this trade, not very confident. This algo seemed too controlled for me, and I felt like, this could be the head, right, that we form here, left shoulder, right shoulder. But the biggest tell here is that we had broken out of my red sell algo, retraced, and I was trading right into the retest of that red buying algo, right, which is right here. Right into the retrace of it. And then what do we have? We have this wick resistance, beautiful, right shoulder, head, left shoulder, and that's a short. A pretty decent short, if you're able to catch that. So yeah, I messed that up. Then we have the head here, double algo, and I long. This was reasonable. I just got out for break even. The market was fighting off against this tapered orange algo, which you can see right here. Right, I posted the pivot here. And once we had built this liquidity right at the tapered orange algo, this is actually the exact same setup I took the next day. Once you see this liquidity build right here, what do? We form a right shoulder, or a higher low, right? And then we eventually get the breakout. And this is the high of day. I know that most days will break the 11 a.m. high of day or low of day. 90% will. And that's what we get here. And I was being stubborn and stupid, and wanting that extra, what is that, 7.25, yeah, literally 1.4 ticks, and being like, oh yeah, it hasn't hit my target or something, my 2R target, we just barely missed it by a few ticks. And even though we're at high of day and this is a major level and I should be exiting, I was being stubborn. And I let it go all the way back to break even. That's just very stupid. And I am reading Adam Grimes' book called, and part of me says like, oh well, the data says to hold the trade for larger targets, and this is true, but what's also said and that's what my data says, is that I should be holding to larger targets, but what I also read in his book said that if your profit target is just beyond some significant level, and there's only a small difference, moving your target to be within that significant level is just common sense. It's that little bit of discretion that separates the algorithmic traders from the discretionary traders. And that's where a little bit of discretion could have come in. Yeah. So it was just a stupid decision, very emotional, stubborn. And then when you start seeing this, I'm like, oh my god, right? Anyways, I have the teal algo, which I started using here, and then the white, which I started using here. And again, it's the same thing. I have to stick with the more tapered one. The story remains the same. So I should have only had charted this white one. Only this white one, right? When you have two that are so close together like that, you stick and you operate off the larger one, because you don't need the noise of having two algos this close together. Just operate with the more tapered one. This will give you the better entry, which we got right here. So I enter teal, and this structurally was okay. Failed breakout of high of day. We have the head, retracement, or move lower, all this liquidity here. We form a lower high, and I flush here, betting on us grabbing all that liquidity. If I kept my stop here, it would have been fine. However, we had perfectly bounced off my Y algo, right? Perfectly. And we ended up holding, moving higher. And then we formed this little micro right shoulder here, right? And I get stopped out for, 3 points, not the end of the world, 3.25 points. And then the move comes, and I grab 10 points off of this. Yeah, that was not very smart, especially when we held support here perfectly. Once we break, then you can enter. And on the heat map, you could see strong negative delta coming in here. So buyers were hitting the bid aggressively. But yeah, it is what it is. Then this was gorgeous. We had this white algo that I had charted from here and here, posted to the bottom, and we hold beautifully right here. And I am looking for a long setup. I was actually looking for a second break to enter short, but once we start holding here, I note this little right inverse head and shoulder here, head, left shoulder, right shoulder, at support, with the higher time frame context of us leading towards the upside, and all this liquidity to be grabbed, and I get long as hell right here. And this was a gorgeous trade to have. When it just goes to target like that, it feels amazing. And there's this blue tapered algorithm that I have posted here. We break out of it. Again, you can't take that breakout. You wait for a retrace. And what do we have? We have the beautiful retrace here. The bar holds support. And we have that right shoulder, head, left shoulder. And we also have this yellow from here and here. And the market just, once we get that breakout, the market has huge volume coming in right here. And we just fly, right? We squeeze higher. And this was just nasty. Yeah, I took like a paper long here, way too high. There wasn't really any structure here. This was just a nasty trap. But yeah, pretty neat. So there was this major trend line that I was watching. I'm not even going to bother to chart out, but we had broken it on this day, and then we had this huge squeeze to the upside. So the next day, I was thinking, or I was leaning more towards the downside, and that's what we ended up getting here. Yeah. So we had this move to the downside off the open, and large gap down, right? Like, oh, wow, 2% move at the absolute peak. Yeah, the volatility is just insane. I mean, from low to high of day, it's a 3% move in a single day. We're just really going like crazy. But where we found support here was really telling for me, because this white line here is the POC of the massive range that I've been talking about, point of control of where the most volume has been transacted, at this level right here, and we found support there, and we didn't just trade back up, we traded back up very aggressively. These are very eager bulls here, you know, and this is just a strong bull trend. So inverse head and shoulder, tapering to yield algo, and you can get long here. So one of the first trades I saw was this short of the red, like this pivot posted up top, and the break lower. However, I set out of this trade because we were right at support here. We didn't have really any lower highs the whole day. No retracement for me to take, like, you know, if there was a short here with the right shoulder, head, left shoulder, that would have been gorgeous. But there was nothing really of value for me there. But I ended up, seeing this. This was nice, if you're able to catch this. We have this large chop, head formation, orange algo, and then we eventually do trade lower on that break. But you have to get in earlier here as we're trading through the liquidity. At this point, all the liquidity here has already been traded through, and you're at the bottom of the range, right into support. We do have this large squeeze to the upside as we break out of this green algo. And again, if you had noted this white algo, which is the, sorry, not white, yeah, white, which is the tighter one of these two, see the white and orange, those two pivots, and I placed that here, you can see us fail, right? But the orange holds cleanly. But you want structure to build anyway, so we do get the right shoulder here, left shoulder, which is beautiful, and I long right here. But yeah, you don't want to be using this white. You want to use the orange, which is more table. And I long right here, and the white holds resistance, and I trail my stop a little too tightly, which was a big mistake here. It ended up not mattering in the end, but really I shouldn't be moving that closely, especially when I have to allow it to back test the orange algo as support, which is what we get here. This ended up getting me pretty emotional, despite the loss only being like 3.25 points or something, like 3 to 4 points. This just felt really stupid on my end, and I was so convinced that we were going to fly here. And I ended up not only not waiting 10 minutes in between my trades, and this is something that has been such a battle for me. It's such a simple rule that I can't seem to follow. You know, I just, across the board, I just see, like, there, of course there's going to be exceptions. Of course there's going to be times when not waiting 10 minutes gets me in a good trade. But for the overall majority of cases, and in the long run, waiting 10 minutes between trades is more beneficial than it is hurtful to my trading. And I need to be able to do that, and I wasn't doing that here. And I was only trading one contract on the first trade, but then I traded two, which makes no mathematical sense for me, given what my profit targets are, and then the maximum profit target on these accounts. So it makes no sense for me to trade two contracts there. It just more negatively affects my bottom line than it actually improves my upside, because it limits the amount of trades that I can take, and it greatly, of course, greatly doubles my risk. But this was just emotional. This was like a completely emotional entry after getting stopped out, after feeling like, I had just gotten stopped out. Oh my gosh, I can't believe I trailed my stop so aggressively. Now it's going to moon up, and I am completely, that was just such an idiotic trade. But no, you just relax, right? You get stopped out. Let it do its thing. Wait 10 minutes. I've always found this to be helpful for me, and I couldn't do it here. And because I didn't wait 10 minutes, I took that stupid loss, which was unnecessary, and I missed this short here, which I absolutely could have taken. And this would have been a beautiful short, because at the time, I have this yellow algo here. We have strong momentum to the downside, and I'm betting on cup close, and that's exactly what we get. So yeah, I'm so focused on this trade at this point in time, and just 10 minutes later, there's another setup. Right? There's a perfect setup for me right there that I could have taken. But my mind just wasn't in it. And I got emotional, and I got upset. and I broke my roll. I didn't wait 10 minutes. I entered here. And then I had this entry here as well, and this was a good entry because you have the momentum here for the bull engulfing bar, double bottom. You have all this liquidity to be grabbed here, and you have to understand that you're trading into this liquidity, right? So the shoulder still needs to be reclaimed, which is right here. You're trading into it, right? I'm not inside of it. But this was already, I had mentioned that, I was leveraged here, and I also took this with two contracts, and the max loss limit on that account ended up getting triggered out like right here. Just, really stupid trading on my end. Not something that I was really proud of, but it's okay as the max loss limit on that account is small. But I was just trading way too big. But yeah, this was a solid trade entry, a more aggressive one. Or here, this is a totally good entry as well, as we have, just like you saw in the prior day, right? We have that tapered algo, posted to the top, failed breakout. We build all this liquidity here. This is going to be used later, and that's exactly when it gets used later, which is on the break right here. I enter long, and I get my target beautifully just like that. This did bring in some emotions here, this purple rejection bar, because we did break high of day, and it had rejected so quickly, and it did remind me of the prior day. But we were pretty far from my target. Like, we were still, 3 or 4 points from my target. That's significant enough for me to just have it at break even. Then, yeah, this was interesting. I had this yellow algo, but I readjusted here. I had drawn the green, which is from this pivot up top to this pivot right here. Right, so you can see the green right here and here. I had posted it to the middle band, that exact green, which goes right here, right? And you can see it hold beautifully with that wick right here, right there. And I had longed right as we held that, and my reaction time was so fast, and I managed to get a beautiful entry here, and just kind of like, oh my gosh, I got lucky with this exit, The idea was that, this is a huge spike, and we're flagging here. I was thinking about shorting here, and that's stupid. That doesn't make any sense. That's a very common type of losing trade I take. And we have the spike, and we flag, and I bet on a breakdown immediately after that spike. But we were holding high of day. That's so bad. We were holding high of day, right? There we go. This was the 5-day moving average at this point in time. The 5-day moving average was right here. We were chopping around it, and I was looking for a liquidity grab to the upside, grabbing that. And that's exactly what we have here, beautifully. But we were holding high of day. There's no reason to be shorting. And I entered long, and it was beautiful on this trade. But I made one very big error, which is I had entered, and I had not set the bracket orders for the stop loss and the profit target to be automatically set when I entered the trade. So I had entered, and I was just in the position. I didn't have a stop or a profit target. And you can see with a trade like this, when I enter and there's news, I didn't even realize there was news at the time. I was just following the rejection here and the quick move up. That was just my reaction. I didn't even know there was news or some sort of major catalyst. It was just, I'm getting in. It held my support, and it's reversing. I'm in long. And I mean, can you imagine if this was the same trade, but I had longed and it went to the downside, and I didn't have my stop bracket on? So this is why when you enter, I have to have, this is such a great lesson for me. Like, I got lucky here, but when I enter, every time I have to have my bracket stop loss in place, because there was a long time when I would enter the trade, I click sell or buy, and then I'm like, and then I would go and I would click, right click on trading view, click trade, sell 1ES at 560.25 stop, and I would set the bracket stop, and then I would go and I adjust the line so that so that it's at my target. So it would take me like freaking 20 seconds to have my stop loss in place. And on a trade like this, like you get murked. What if I shorted here? It's just those small little things. What if I clicked the wrong button and I accidentally shorted? Like, that's totally something that could happen. That's happened to probably everyone that's watching this video. So this is why. This is just a good lesson for me. Like, always enter and make sure that my brackets are in place. But anyways, I digress. So long, this was a trap in my opinion. This was just trapping out a stop run and fake news, some BS news, whatever. And then we topple over. And then you're able to chart this more aggressive teal, right? You can see that from this pivot and that pivot and going here. And you have a short entry right here with the beautiful head and shoulder head. Right? Pretty that would have been sweet. Grabbing all this liquidity here. But you cannot short thereafter because then you're trading right into support. And after this move, the bearish momentum has been completely reversed. So we have the big up, we reverse the whole move, and then big up again. Like we're just trading in a range here. This is just up, down, like up, down, up, right? And this is all support, this area right here, right? You can tell by my shaded blocks. And we're just chopping around it. And see, like we're just trading within this range, right? And a part of me, I have this large intraday green algo, right? Posted here again. And I probably would have taken this long and gotten stopped out here. That's fine. But shorting here is stupid. If I got caught on this short here, I would not have been happy. Because we do not have a singular cup close. There's no reason. We have not had any aggressive sustained selling the whole day that actually gave us a lower high and a continuation. All the selling gets eaten up. Sorry. All the selling gets eaten up. Okay. All the selling gets eaten up, eaten up, eaten up, eaten up, right? Eaten up. There's no reason to be selling here unless we have a cup close. And this isn't even, I show you this green algo. This is the middle band of the green algo. You want to wait for the most tapered and outer band, which is this one, with a cup close. We don't have a cup close. We don't break the outer green band. So there's no reason to short. And if you're able to stay out of that, then you are beautifully rewarded with this orange algo, right, from here, posted to the top pivots. And you see us holding here and here beautifully. Breakout grabbing this liquidity. Breakout grabbing all this juicy liquidity here. And you get that end of day short squeeze. Beautiful. Breaking out of the range. So yeah, that was a pretty in-depth video just reviewing my trades, my emotions, my thoughts on the week, great setups that I missed. And I hope you found some value out of it if you've made it this far. Because this was very helpful for me to do. But yeah, I just have to continue. I have to avoid these kinds of trades, follow my stupid, so important 10-minute rule, and just continue to trade and trust, right? Keep it simple and just keep going. All right. Thank you very much for listening. That's amazing if you made it this far, and hopefully you have taken some sort of value or lesson from my mistakes and as well as my success that I've had these past 3 days. Thank you very much.